Hello guys. So today I wanted us to look at Eurocad, Euro Canadian dollar. So in this pattern, I identified a W pattern. If you followed me, you know that this is one of my favorite trading patterns that I do trade. Reason being, you always get an opportunity to scale into the trade early, and it has a very clear defined place to place your stop loss and your target profit. So let's look at it. So basically, okay, I've drawn it already. So basically, a W pattern does take place after a bearish rally. A W pattern is a reversal pattern after a bearish rally, meaning that the bulls are almost coming back into play. Okay, so first off, let me show you an example of a W pattern. So there are different types of W patterns. They're the ones that form an equal low. Like you see in this example, there's this low here. There's a scenario where it can form an equal low like this one, this low and this low, or almost equal low. But then the momentum indicators. Remember, momentum indicators are lagging indicators. They show information. They are calculated based on uh, previous price action. So for a reversal pattern, they can assume in this case it's a W pattern. In such a case where we have equal lows, still the momentum indicators will show a divergence of, like, they will form a higher low. Okay, meaning that this move is fake. Let me show you let me explain the idea behind these reversal patterns. The last time the price pushed to this level, momentum indicator was at around this level. Then price continued, retraced back up, then it came and broke the previous low. Okay, once it's below this previous low, if it's a legit move, the momentum indicator should be lower than the previous time it was at this low. Okay, so in this scenario, you see that it prints a low, then it prints a lower low here, but then here it prints a higher low, meaning there's a false move. You understand? That's how the market makers play. So that's the ideology behind reversal patterns. So in this case, we can see Eurocad. They formed a low here, then it formed a lower low, yeah, because it's slightly lower than the previous low, or okay, almost equal low. And then, but when it comes to our momentum indicator, the last time the price was at 1.33915. Our momentum indicator was around 24.81. The next time it reached uh, those same prices, momentum indicator, if it was a legit bearish move, the momentum indicator should have been lower than the one that we've seen 24. But now in this case, it's at 30, meaning that's a false move. I hope you've understood the ideology behind reversal patterns. So so I hope you've got the idea behind the reversal pattern. So then let's scale down to lower time frames. Another thing you have to identify. Let me show you. Let me show you another example here. Let me show you another example of how to identify that a trend is almost changing. Let me first clear this line that I've drawn. Identify this low. Okay. identify this low. Here's a low. And let me just, do I use a highlighter or something? Where is it? Where is it? Highlighter, okay. So these are low, okay. Higher, it forms with this low. Then it prints a lower low around this place, okay. If it's a legit move, a legit bearish move, the previous time that prices were here, the momentum was around 20.54. The next time prices went lower to 1.34, if it was a legit bearish move, the momentum should have been lower. But in this case, it's higher. You understand? So meaning now that here market makers doing what? Here market makers trying to hunt stop losses. The next time it printed this low, remember the momentum indicator should be lower than the previous time it was at this low, okay. But in this case it printed a higher low. Now you understand? So this was the idea of price is forming lower lows while momentum is forming higher lows, okay. That is a sign that prices are almost reversing. So we come, let's print our, I've already shown you the lows. So here is our high, okay. Here is our other high, okay. Then this high now, this is a lower high. Now it's been breached, okay. We've now formed higher high. These are lower high, lower low, lower high, lower low, lower low, higher high, okay. So meaning that now, and it's obviously in our area of interest because we had marked that as our W pattern. So now after we've identified that, you come and mark the places you'll be looking to execute your position. So I do use order blocks. So our first bullish order block was around there, which was missed. Yeah, it was missed. So if you are the guy who was to wait for the entry, a buy limit around this place, which can still be retested, this will be a good region to place your entry. You might put your stop loss here or below here. Obviously, your target will be around here. So assume our price is touched that place. Assume it's touched here. Our stop loss could have been below the OB. Okay. Obviously, our target should be in the neckline of the pattern. That could have given us a 1:7 RR. Okay. So of which the scenario I never played out, but I'll still be having a buy limit around that place. You don't know, prices might shoot down for stop hunts. The next place we've broken now this high to form a new higher high. So I come and update my new OB. This is my my OB of interest now, of which it was triggered. You see, prices came and retested. Prices came and retested. So this could have been another entry around. I think it triggered at around that point. If you're going to use state stop losses, I do give space for, but the stop loss will be below the OB. But I do like putting my stop losses below the swing low or swing high. Yeah, and so yeah, that is 1:4. if you stake $20 in this trade, it means in case it goes against you, you lose $20. In case it goes in your direction, you'll gain 20 times 4. That's $80. So that's basically it for Eurocad. I've shown you the ideology behind how a reversal takes place. And then let me show you another thing. Just notice how bears do come fast while they're coming. Just notice how the momentum from just the price. Just notice how the momentum is sharp around this place. Bears are taking the market to lower prices at a very fast rate. But then when reversals kind of start showing up, you see how the momentum reduces. Do you see? Do you see how the momentum reduces? These are signs that momentum is reducing for bears in this case, or for bulls in the opposite case. Assume we were trading an M pattern. This is how you know that prices are changing, the momentum is changing. So you always always do scale down to low time frames and look at market structure and identify when the change in market structure takes place, meaning that change in direction is taking place. Okay, so another example, let me show you just another example of a W pattern, but it's in low time frame. These are lower low, these are lower low, these are low, these are lower low. Okay, but then in this case these are low, these are higher low. You see, so targets, I've shown you how to place your stop losses. Targets for a W pattern, you always put your target at the neckline. That's the first target. Then the second scenario you can trade a W pattern is after it's complete. Let me show you an example. Look at this now. The example I was showing you, it's assume the price came all the way here, then it went here, then it went here. The scenario that I'm showing you, the price is at around this place. Then there's the second scenario where after the price has reached our take profit and it breaches on the upper side, we always look now for entries to retest, where we will be waiting for retest to happen and then continuation of price to the upside. I think I can go look back at Euro. Okay, let me see if Euro NZD. I think I've seen such a pattern. Yeah, this is a good example. So this is Euro NZD, of which I'll be doing analysis, so expect to see it within the week. This is Euro NZD. You now notice the pattern that we've been analyzing here. The price comes, then it goes up, then comes down to almost the same level. Okay, and then let me bring it here so that you can see. Then look at the momentum. When the prices were here, the momentum was at around 6. When prices reached at prices lower, the momentum was higher, meaning that it's a false move. It was at 32, meaning that it was a false move. Okay, meaning that these were stop losses that were being haunted before bulls come in. So scenario 2 is where you wait for. So like I told you, you always go for to lower time frames, identify if change in patterns and in lower time frames. Then once you scale in, obviously your stop losses will be your stop loss is supposed to be in the previous low. Then your first target, as I've said, should be at the neckline. Okay. Then scenario 2 is where now after prices have breached up, now we wait for a retest around this place. Okay. Now remember, you never know where the retest will reach. Okay. So but every pattern does come with clues of where the retest will reach. It doesn't actually have to come back to the neckline immediately and reverse. You might find it will respect a Fibonacci. You might find maybe the pattern also has maybe a trend line that it will come and touch. You understand? Uh, you might find maybe something like an OB. Like let me give you an example of Euro Swiss. I did this analysis. Uh, Prices for people who wait for immediate retest, they will have entered at around this place. So I had two scenarios in such a pattern. I analyzed it. I analyzed this pattern yesterday. I had two scenarios. I would have waited to enter somewhere around when the prices come and test this trend line, or the other point will be around this order block, and you see that the prices have started reacting around this order block. Look at a person who enters this trade at around this place, and the stop loss should be somewhere here. Okay. Look at a person who enters around this place. So this person and the stop loss is around here. Okay, same place. Look at the person who enters at this place and the person is around here. So the guy that enters around this place is the one who is more privileged, because the person is allowed to use higher lot size according to the capital he or she has in the account, because the person will be using as a tighter stop loss. Okay, now you understand. And then please note that every trading pattern has a defined stop loss and it has a defined take profit. You never guess. Okay, and this the stop loss and TP depends on a few things. It will depend on the chart pattern. It will depend on the time frame. It will depend on the currency. You understand? Yeah. So we were looking at Eurocad. Sorry, I've gone to other topics, but hopefully you've learned something. So this is a pair that we'll be looking for forward in this coming trading week. I'll also be doing analysis on Euro NZD, putting maybe looking into areas of interest where we'll be looking to scale into that long position. We will have to. Yeah, thank you.